What's going on, everybody? Happy Friday. Hope you had a great week in the markets. I know today was a little bit tough. Well, the markets struggled a bit. So, earlier in the week they were a bit stronger. So I think we saw some really crazy earnings. The Google earnings were crazy. The Amazon earnings were crazy. The Facebook earnings were crazy. A lot of crazy numbers popping out in the tech sector, at least. But today was pretty weak. I think there's a lot of profit taking going on, and we'll see what happens next week. But anyway, I want to make these videos a little bit shorter going forward, so I'm going to jump right into this one. I want to talk about Genius Sports today. So Genius Sports is a little different from the other ones we've covered. They came to the market on April 21st, was their first official day trading, but they came to the market through a SPAC. So most of you guys probably know what a SPAC is, but for those of you who don't, I pulled up the Investopedia page just so you can get a little bit of an idea of what it is. You can see it here on the screen. I'll give you a little bit of a synopsis really quickly, and then we'll jump into it. But basically what a SPAC is, Special Purpose Acquisition Company. It's a vehicle that trades on the public market, and its sole intention, this is bugging me. Okay. Its sole intention is to acquire a private company and to take them public, through that vehicle. So, it's like an IPO. There's a lot of investors or traders, a lot of the older investors or traders who really dislike SPACs. They dislike the space. So I want to be very transparent here. SPACs in general, the market is very, hit or miss. There's a lot of companies out there that are not good companies, that are way overpriced. So I'm not endorsing all SPACs. So I don't want you to just run out there and start buying SPACs. This isn't financial advice. Just giving you a little bit of background on one that I think outperforms other SPACs and is, kind of like a diamond in the rough in the space. The other thing to keep in mind with SPACs is, it doesn't apply here for Genius, but if the investment vehicle, so let's say you buy 10 shares of XYZ SPAC, and they're searching for a target. If they don't find and acquire a target within a certain, defined time frame, then you actually get $10 back per share. So if you do, really like a SPAC and it's trading 10, 12 bucks a share, on a rumor of a company that you like, maybe you want to look at it, but be very careful because there's a lot of SPACs out there that are just hot air. There's, one example earlier this year, I think it was Nicola, I don't know how to even pronounce it. I wasn't personally in it. Sorry about that, but yeah, Nicola. So essentially what happened is, everybody hyped this up as this big EV company, with all these orders and all that. And it come to find out that, these orders were just basically like holds that people, say kind of like, for me personally, I'll just use an example. Like I put $75 refundable deposit down on a Ford Bronco. So that's not really an order. I don't know if I'm going to buy it or not. I just wanted the option to. So it was like something strange like that. They actually didn't have any cars in production, but it was like a $30 or $40 stock at the time. Now it's like $3, $4, something like that. But anyway, point being, be careful with SPACs. They're not all, they're not all good. The majority of them are not good plays. But again, let's jump into this. I just wanted to give you a quick overview of that. So today we're going to be looking at Genius Sports. Genius Sports, you might have seen them in the news. They recently signed a 6-year deal with the NFL, and I want to go over that, but we're going to go over that later. Let's first look at what the company's about, what they do, all that good stuff. So I always scroll down here to look at the partner section while I go over this, but essentially what they do is they have 3 lines of business: sports, betting, and media. And they provide data and analytics for all 3 of these sections. So, anything from statistics from the game to streaming a smaller event. So for example, they have a partnership with a volleyball league that's pretty small, probably doesn't get a lot of TV coverage, but they find avenues and actually set up like streaming feeds for these leagues so that they can get more attention. And then on the betting front, they provide, patterns and behavior data, so that bookies or the bookmakers can kind of structure their plans. So they're really valuable, and they have a really, really big portfolio. They have over 700 partnerships. And if you look at some of these, like these names pop off the page. NFL, like I said, that's the biggest one. We'll talk about that deal more in depth. So I'm going to hold off on that for a second. Premier League, NCAA, FIBA, PGA Tour, EuroLeague Basketball, Pizza Hut, MLB, Michigan Lottery, FanDuel. So the other good thing, like not only do they have all these big names, but they're across a lot of different industries. So, they're not going to be crazy affected, by one, area having struggles, because they have different companies in different sectors that are probably doing well. So really good mix of, clients here. And it's not really concentrated with one big client. It's kind of spread out. So that's kind of the one piece that I always like to go over first is like their partnerships, because that's their kind of like their bread and butter. And it makes them kind of legitimate when you see it legitimizes them when you see, NFL, NBA, MLB, English Premier League, things like that. So let's keep moving on. The other thing I wanted to look at here is they did just report their fourth quarter numbers from full year 2020. Here's a snapshot right here. I'm not going to read everything, but you can see it. The highlights are that they have no debt on the books. They have pre the SPAC merger, they had no debt on the books and I think it was 175 million in free cash flow. So typically what you'll see with the SPACs is like I said before, they don't even have a business operation going yet. So they're certainly not profitable. If they do have a business operation, they're usually losing money. With Genius Sports, that doesn't seem to be the case. They're very close to or even above in some quarters profitability. Very outstanding for a young company. Let's go over, I'll read out some of the highlights, and then, you guys can check this out a little deeper if you want to look into this. But group revenue increased 27.6% year over year to 47 million. Betting, technology, content, and services 23.4% year over year. Here's one that declined 1.7 year over year. However, in quarter over quarter, I think it did better. So I'll have to look into that. I'm not sure what was the reasoning for that. My guess is that in the sports sector, with the pandemic, a lot of the smaller leagues for sure, they had slimmed down operations or no operations at all. So that definitely, I think, played a role. So I'll look into that a little bit more, but it's something to keep on your radar. But here's the big one. Media, technology, content, and services increased 90.5% to 7.5 million. Still a small number. However, that increase tells you that's, moving in the right direction. And, 90% year over year is nice. So those are some of the highlights. If you want to look at the full year highlights, those are the fourth quarter ones. So here's some of the bigger numbers. You guys probably want to see these. So the group revenue increased 30.6% year over year to basically 150 million. Strong growth across all product lines. Revenue increased 34.5 million or 30% year over year. You can see, how it's broken down there. And then, here, this is what I was talking about. So that was for the quarter, the revenue was down, but for the full year, the sports technology and services was up 11.8% to 16.1 million. And then their adjusted EBITDA is 17.5 million in profit from a $6.2 million loss full year last year. So that's the kind of rundown on the financial outlook. I know a lot of you guys like to see that, so I want to put that up. Now, let's jump into some of the more fun, the news articles and some of the big deals and the movers and shakers. So, first off, while I'm getting, I want to pull something up on this side here, but so here's the deal, the announcement of the NFL deal. This is, massive for a number of reasons. So one, we already talked about. It's rumored to be worth $1 billion over 6 years. So one, a lot of revenue coming in. Two, it's a multi-year contract with the biggest, sports league in North America. And then three, the NFL also took 5% ownership stake in the deal. So that means that the NFL now owns 5% of Genius, which means they want to see it do well. They want to see it be successful for a number of reasons, not only because they're a partnership, but also now that they're an owner. So they want to, make back money on their investment. So that's really good to see, because if you have the NFL backing you, then, you unlock doors that a lot of companies don't have access to. So that's another one. And then four, the kicker, this was wasn't covered as much, but this is probably the most important, I think. They have one major competitor in the space, and their name is Sports Radar. And they're actually looking to go public through another SPAC. I think it's called Horizon is the ticker. That's the SPAC company that's in talks with Sports Radar. But Genius Sports overtook Sports Radar for the deal. So they beat them out and replaced them as the NFL's sole provider of data. So I would advise you, not advise because this is not financial advice. I would suggest that you go, before you look at this stock, you should go check out the deal. This is just, one article on it, but if you put it into Google, you can go see, some of the details of it. But I think I covered, the highlights. So 6 years, $1 billion, replaced Sports Radar, who is their biggest competitor. And then, of course, the NFL takes ownership. So here's bullish on Genius Sports stock broadly. The NFL deal is a game changer. I already went over this, but again, it legitimizes the company. So, other sports leagues can now, Genius can walk up to these other leagues and say, here's our portfolio. We can handle, anything. They got the NFL, MLB, and in Europe, so they're headquartered in London, and they're based in Europe, and they have the biggest, sports leagues in Europe too. I'm sure they compete with Sports Radar for some of it, but I know that they have, at minimum have FIFA. They have Bundesliga, the German league, German soccer league. They have the English Premier League as well. So that's another, big time deal. So while we're on this one, the last piece that I wanted to go over was the hiring of David Levy. So David Levy is he worked for Turner Sports. So Turner Sports, if you know what that is, TNT is, if you watch the NBA, you know what TNT is. That's one of their networks. But essentially they have a bunch of different networks and sports. They run a lot of different sports, channels. So MLB.com is one of them, NBA.com. Sorry about the train, guys. I'm just going to keep talking through it. But so anyway, David Levy used to be the president of Turner Sports Media. So he was responsible for a lot of huge deals while building out that, content channel. And he had really good relationship with the NBA, NFL, NCAA, all that stuff. So long story short, Genius Sports added him and hired him to basically run one of their, senior leadership positions. And, 2 weeks after he's hired, this NFL deal is announced. So this is a speculation that it was all him, and I'm not saying it was all him. I'm sure it's, not all him, but I certainly think that has something to do with it. And if it does, then that bodes well for the future, right? Because if he comes on and he's bringing in, his book of business, so to speak, and his relationships, then there could be a whole new ball game and a whole new, set of clients for Genius Sports to take over. So I think they're very well positioned in the space. I hope this was a little bit shorter for you guys. Tried to keep it under 15 minutes or so. I think I'm right about there now, so I'm going to cut it off and end it. But yeah, check it out. let me know what you think in the comments, and if you have any questions, put them down there and I'll try to answer them. I will just quickly say I do own shares in Genius Sports. I bought it back when it was, I think, $13-14 a share, before the merger had closed and all that good stuff. Since the merger has closed, it's actually ran to about 21. I think it's around $21 a share. So still affordable. I think once you start to see, the less, what's the word I'm looking for here? The less realistic SPACs fall to the wayside. I think some of the better ones that are actually quality private companies that went public in this, easier route. I think Genius Sports rises to the top there, and I think people are starting to notice it. So probably a good time to get in. You could always wait and wait for a dip, but I think it's going to be a pretty good stock for 2021. So definitely keep an eye on it. Let me know if you have any questions in the comments, and I'll see you for the next video next week. Thanks.